Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you a simple hack that's going to allow you to win all the time. Now, this is an extremely simple hack. I'm not sure why a lot of people are not using it, but do not worry. I am here to help. So, if you're new to options trading or you're trying to use options trading in order for you to get some additional income to supplement your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you a simple hack that anyone could do on any brokerage if you want to increase your odds of winning the trade. Now, we usually stick to Robinhood, so I'm going to use Robinhood in order to show you that. Now, what I'm going to do is that I'm going to use one simple option strategy, but this can be used on almost all option strategies. Now, if you guys are ready, before we go ahead and get down and dirty with options, I always have two criteria I request from my viewers and also my subscribers. Now, it's quite simple. Number one is going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. And secondly, always make sure to have an exit strategy before entering any trade. This video is going to be focusing on simple exit strategies. Now, you guys know how we do it. We're going to go ahead and get down and dirty with options. Now, we're going to start off by using one of my favorite stock, which is going to be SG or Sweet Green. Currently, the stock is trading at a share price of $14.15. Now, as you can see here, I have a call at a $20 price. Right away, you could realize that I'm actually down this contract because the current price is a lot lower than the strike price I chose. Now, let's go ahead. I'm going to show you the details. I'm going to show you how to always win with any option strategy that you're dealing with. So, the current price is $2.03, but my average cost is $3.44. So there's a huge difference. That huge difference is going to represent a negative outcome of $565 or a total return of 41%. So I'm currently down with this option strategy. Now, I did go over briefly the current price of SG, which is $14.15. Now, there's a couple of things I want you guys to remember. One of those things is going to be the break-even price. So the break-even price is going to be $23.50. What the break-even price tells you, it mainly gives you a guidelines. What it's saying is that by expiration date of January 16th, 2026, SG needs to be at 23.50, and if that happens, then you're gonna break even on the trade. You're not gonna be profitable. You're only gonna break even if it hits the 23.50 mark at this date. Now, the other number I want you to remember is the $20 that I showed you previously. So the calls that I bought is at the $20 strike price. Now let's go ahead and we're going to go down and I'm going to show you this little hack. So what you're going to do, you're going to open any options contract you have and you're going to go down to this button right here that says simulate my returns. Let's go ahead. We're going to open it up. Now, this is a quite nifty feature that Robinhood provides free of charge that can be used. Now, currently you could see the amount I'm down on the position. So what you're going to use this chart to do is to simulate your returns. Now, I'm going to show you how to use it. So we're going to go down right here where it says 14.15, which is the actual price that SG is trading right now. We're going to hit the little pencil icon right here in order for us to edit this. Now, what I'm going to do, I'm going to put in the $20 price, which is the price of the calls. I'm going to hit enter. Now, what this shows you, this regenerates the chart and it shows you your level of profitability right away. So what this tells you, right? SG is traded at $14.15. If the market opens tomorrow and this stock happens to go up to $20, then I'll be up on the trade around $715. Now, as the line goes down, you can see the amount of money that's going to be profitable starts to decrease because time is now working against you. But at any time on this green line, it represents the share price of $20. Now, as an example, we're just going to go to October right here. We're going to use that as an example. Now, with October right here, you can see above it says 107 days D to E or 107 days days to expiration. So at 120 days to expiration, you're still going to be profitable on the trade. As you can see to the top left, you're going to be up $83. Now, here's an exit strategy. You can simply choose to close the option contract and lock in your investment gains. Your investment gains in this case is going to be your $83. Now, a key thing to note, anytime you go past that time, you're going to see that although the share price is still at $20, you're going to now be having a negative return. The reason for that is that you have another feature that keeps eating away at your contract, and that's going to be known as theta. Any option contract, the most important thing with all option contract is always going to be time. So whenever you have a leaps option or long call option in your portfolio and there's 3 months left on the trade, theta starts eating away very quickly at your option contract. So exit strategy number one is to be close off your contracts, lock in your investment gains, and that's it. You're up on the trade, you win. Another exit strategy that can be used is what's known as options rolling. Now, option rolling is just a fancy terminology that means that you're going to be closing out your current contracts while simultaneously reopening other contracts. That's all rolling means. So at this price, we're going to be closing it out. We're going to gain $75, and now we're going to have to pay additional money to enter into additional contracts. What's going to happen is that the money we're going to lock in, which is the $75 to the top left here, once we lock that in, we're going to get that as a credit, and that credit is going to go and help us reduce the amount of money we're going to pay for the additional contracts. Hopefully you guys are following along with me. Now, so that's how that works with the $20 once the share price goes back to your $20 mark. Now remember, the option contract I have is a leaps option. You can use this on a buy call, on a sell call, on all different option contracts. So what we're going to do now, I did ask you to remember the other number. That other number was $23.50. So we're going to go ahead and we're going to mimic that as well. So I'm going to go ahead, put in $23.50 right here. I'm going to hit enter, and voila. So it has now regenerated another return. Now I'm going to follow you along the line once again. So any point along this green line, it tells you the share price is at $23.50. Now we're going to go all the way to the end. If at expiration date of January 16th, 2026, and the share price hits the $23.50, you're going to be in a situation that's known as break even, meaning you're not going to win on the trade, neither are you going to lose on the trade. Your contract is simply going to be worth the exact amount as you went into it with. Now, before that, if the share price does hit the $23.50, let's say tomorrow it hits $23.50, then your whole account options portfolio is going to be up now by $1,675. So once again, you have an option of whether you want to close off the trade or you want to roll out your options. In this case, there's almost 100% chance that I'm going to close off the options because, as you guys know, the name of my channel is Investment Gains. There's nothing I like better than locking in my investment gain. If June 9th comes around and the strike price hits $23.50, then it's advisable to close the trade, lock in your investment gains. As the time goes by, July, August, September, October, once the time goes by, if it goes by to October, once again, you have 108, 107 days to expiration. I would still lock in my gains. Your gains is going to be a lot less than if the share price were to go to $23.50 before this time. But however, you're still going to be having gains. At this point, it is highly advisable, once again, you close your trade and you lock in your gains. So that is how you use this feature, which is the Robinhood simulated feature, in order to give you an added edge, an added bonus of how to manage your trades and when you're going to be profitable with the trade. The one main reason I use this for is to always get this point here, which is always going to be 3 months before my contract expires, because I know 3 months before my long call or my leaps expire, that is when theta is going to start eating away at all my gains and my contract. So once it gets to that point, then I go ahead and implement my exit strategies in order for me to either lock in gains or minimize my losses. Now, if you guys have ever used this feature before, let me know how it's working out for you in the comments below. And if you guys have not used this feature before, if this is new to you, then go ahead and let me know in the comments below. I might go ahead and make an even more detailed video about how to use this. Now, there you guys have it. This is one hack which is absolutely free on Robinhood that can be used if you want to increase your chance of winning on every single trade. As I mentioned earlier, I am actually demonstrating this using a buy call or a leaps option. This simulated returns can be used on almost every single option strategies, covered calls, cash secured puts in order for you to be able to simulate your returns and know how to get an exit strategy before the worst of the worst happens. Now, you guys that have made it to the end of the video, you guys are the real investors and future investors. Go ahead, like the video, subscribe to the channel. Make sure to hit the notification bell to get an alert whenever I post videos like these. And most importantly, if there's someone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can make money in order to get away from that 9-to-5 job. Now, until the next video, keep pushing your investments.